Hey guys, Bix Weir, roadrunner.com. Let's talk silver, Deutsche Bank, Trafigura, Glencore, Marc Rich, conspiracy to rig the silver and gold markets. Bloomberg headlines today, April 17th. Deutsche Bank takes hit from metals deal. Surprise, surprise, surprise. German lender was one of the zinc company's leading financiers. We all know that one of the major byproducts of zinc mining is silver, 100%. $150 million prepay structure for line for heavy losses. Last summer, Deutsche Bank AG trumped a deal to strengthen the finances of Europe's largest zinc smelter, Nyrstar NV. Less than a year later, the Belgian company is undergoing a massive debt restructuring, and the $150 million financing structure set up by Deutsche Bank is in line for losses of as much as 70%. Although relatively small in absolute terms compared to their derivative book, the losses are a black eye for Deutsche Bank, one of the leading financiers of the natural resource industry. Another reason why they're not going to merge with Commerzbank. Deutsche Bank is just, I've said it all along, it is the linchpin for the destruction of the entire derivative system. Remember, as all this goes on, Deutsche Bank was the largest derivative player. This was not just $150 million financing of a zinc company. This is a huge derivative structured bet that Trafigura was in on silver, trading silver derivatives to control the price of silver. Nystar racked up massive debts during an ill-fated foray into mining around the start of the debacle. Deutsche Bank played a key role, becoming one of the company's leading financiers. In addition to bonds, Nystar raised money from banks and traders through prepayments for future supplies of metals such as zinc, copper, and silver. Derivative city, my friends. Under the structure arranged by Deutsche Bank called Politas, lenders advance money to Nystar as a prepayment for future supplies of zinc and silver. It is by far the largest of several prepayments that are being restructured under the deal announced on Monday, and is potentially in line for some of the largest losses. A spokesman for Deutsche Bank declined to comment. Surprise. Metal financing deals. Deutsche Bank is one of Nystar's top lenders, and the zinc deal set up by the bank stands to take some of the biggest losses. And there it is in red. But look at the black thing right next to it, Trafigura. How many times have we talked about Trafigura on the road to Ruta? I'll get into that in a second. But look at all the silver deals back here. You're hedging silver at $25, $30, $36, $20. To be sure, German lender isn't alone in taking a hit from Nystar's restructuring. Commodity trader Trafigura Limited, which will take control of the zinc company, has had to write off more than 200 million euros. Now, Trafigura is a private company. In 2015, it was exposed, and their CEO and founder was found dead, basically. I'll get into that in a second. Other banks, such as Goldman Sachs and JP Morgan, also advanced money to the smelter in exchange for future delivery of metal. So they're not going to get the metal. JP Morgan. So did traders like Glencore. There's Glencore. Remember, Marc Rich's company. Marc Rich is the commodity trader, best commodity trader in the world, most criminal commodity trader in the world, on the FBI most wanted list. The last guy that Clinton pardoned right before he left office because he was rigging the gold and silver markets and the oil market for Clinton during the strong dollar policy. The strong dollar policy was all about rigging the prices of commodities. All right, let's see where we are. According to the company presentation, Nystar owed 674 million euros, $761 million, through prepayments through the middle of February, a figure which includes 450 million of lifetime traffic in a lifetime Trafigura provided last November, which is not being affected by the restructured deal. But while some of the banks refused to roll over their prepayments with Nystar last year, Deutsche Bank refinanced Politas last May and expanded it in July. Deutsche Bank. Because they couldn't take the hit on the silver derivative side. Politis is potentially in line for some of the largest losses under the deal announced on Monday. While prepaid lenders will on average get 35 cents on the dollar under the deal if they don't contribute to a new financing facility, lenders under Politis will get as little as 30 cents, according to people familiar with the matter, as it has a later maturity date. Still, they added, Politis lenders can get significantly better returns if they contribute to a new facility. So what's Deutsche Bank going to do? Throw more good money after bad money. Long history. Now listen to this. And Bloomberg's supposed to be, they're supposed to be one of the best financial reporting agencies out there, right? It's unclear how much exposure to the Politis prepayment structure Deutsche Bank still has. It's unclear because they won't tell you. Why won't they tell you? Because it is absolutely linked in with their silver derivative book. Trafigura, which buys zinc from Politis under the deal, holds 30 million of the 50 million total, 150 million total, according to people familiar with the matter. Deutsche Bank's relationship with NiStar stretches back more than a decade and is likely to have delivered sizable earnings in fees and interest until now. That's how derivatives work. When Deutsche Bank writes a derivative, they get all the money loaded up front. That's where all the money is made, and then hopefully they never have to live up to the obligation, but of course you do. Sizable earning fees until now. Along with Goldman and UBS, it managed the zinc producers' public IPO in 2007. Deutsche Bank first organized prepayments financing through Politis in 2015, when it was a joint global coordinator for NiStar bond in 2017. So I went back to 2015. I got some information for you on the road to Ruta. To the archives. Make sure you guys look at the archives at Road to Ruta. The bank also mandated lead arranger for the company's $600 million euro structuring commodity trade finance facility so they can continue to rig the silver markets. Lenders under that facility, which is secured, won't take any losses in the restructuring if they commit to participate in a new. Basically, they got these banks up a wire and they are screwed because they either bail these guys out by giving them more money or their derivative book takes a monster hit. All right, let's have a quick recap. This is a long article. Go to roadtoruta.com. I think it's one of the first or second articles on there. Maybe not. Third. There it is. A few articles down. I'll move that to the top. Glencore Metal Derivatives Conspiracies and the Endgame. Check out this article. It is free for all Road to Ruta people out there. You want to get on the Road to Ruta, put your name and email in here and you'll be on the Road to Ruta. It's that easy. But here's the article. And it's called Glencore Metal Derivatives Conspiracies and the Endgame. I loved this article. It was pretty long when I wrote it. I wrote it, I believe, in 2015. Remember Marc Rich? Many of you know him as the rich donor that Bill Clinton pardoned in his final act as president on January 20th, 2001. That's pretty much all your average Joe knows. If you want to know the real Marc Rich, read the book Metal Men by Craig Kopitas and you'll get a better understanding. Anybody who is invested in silver, gold, even the cryptos, buy this book and read it. Metal Men. It'll scare the crap out of you and show you just how much market rigging is going on out there in silver and gold and also in all commodities. It's crazy and it's well known and it is condoned by the deep state and what do you do? Marc Rich was born Marcel David Reich, but changed his name to present himself as more Anglo-American and less of a poor Jewish immigrant that fled from Germany. He claimed it would be better for business. This name change wasn't the only facade he would portray over the years. Marc Rich was by far the most successful physical commodity trader in the world from the early 1970s until the day he died in Switzerland in June 2013. There is no disputing that fact. But during the time he and the small group of traders that he trained racked up a laundry list of crimes around the world that would make Al Capone blush. In 1983, he was indicted on 65 criminal counts, including racketeering, money laundering, tax evasion, and trading with Iran during the U.S. hostage crisis. Facing charges that would have amounted to over 300 years in prison, he fled to Switzerland, where he ran his global operations for another 18 years until Bill Clinton mysteriously pardoned him and his colleagues in 2001 for reasons unknown to the public. The true story, the conspiracy story, is that Marc Rich controlled the backbone of the commodity rigging operations run by a group I have come to call the bad guys. As large financial institutions and central banks ran the computer-controlled price rigging operations, Rich and his traders were hired as needed to control the physical side of these covert operations. Here's a short list of the crimes and conspiracies he played a key part of. 1. He was hired by Henry Kissinger and the Israeli Mossad in the 1970s to help rig the oil markets in order to set up the petrodollar. 2. He was hired by George Bush Sr. as part of Project Hammer to economically destroy the Soviet Union. 3. Hired by Bill Clinton in the 1990s to rig the gold and silver markets for the strong dollar policy in exchange for the pardons of himself and Pincus Green, Rich's right-hand man, also exonerating his accomplices Ivan Glansberg, now CEO of Glencore, and Claude Dauphin, majority owner and chairman of Trafigura, who just suspiciously died on September 30th, 2015. Although it is still unknown to the public to what extent he played, Marc Rich was knee-deep in the Bernie Madoff scandal, which was much, much more extensive than the mainstream media portrays it as, a $65 billion Ponzi scheme run by a single person. The Madoff con was how the bad guys got paid via market rigging operations run out of the secretive 17th floor below Madoff Investment Securities offices located on floors 18 and 19 of the, quote, Lipstick building on 3rd Avenue in New York City. Marc Rich and friends controlled the commodity side of that operation. If the above information isn't enough to make you feel ill, in the 1990s, then Representative Bob Weiss of Virginia unearthed evidence in hearings from the early 1990s which showed that while Rich was still a fugitive, the U.S. Mint was a large customer of Rich and Company, buying metal from one of his companies. The U.S. Mint issued at least 21 separate contracts for various types of metal to the company. Also in 1988, the U.S. Defense Logistics Agency lifted its bar on contracting with Rich's company while he was still under indictment. So much for being on America's top 10 wanted list. There were and are people in the U.S. Treasury and the U.S. Mint that were knee-deep in his global con game. So what does all these past misdeeds of Marc Rich have to do with the current situation for commodity investors? That's easy. Glencore PLC is headline news these days and is sitting on suspected derivative losses in the billions. Now, this is 2015, and they were bailed out by China. China wanted to keep the game going because they're winning the game. The global financial system is on death watch, and many are likening the ramifications of Glencore imploding as the next Lehman moment. Let's put the conspiracy pieces together. Glencore at one time was called Marc Rich & Co. and owned and operated by the very same Clinton pardon recipient, Marc Rich. According to court documents from around the world, Rich hired and trained the most unscrupulous, successful commodity traders alive today. Many in the commodity industry called them, quote, the rich boys. These are not businessmen, but covert commodity trading racketeers who have no country, follow no laws, and have no allegiance to anyone. These people can be bought by the highest bidder to do the more unsavory deeds in the underbelly of the already shady physical commodity world. Oil out of Iran, toxic chemical disposals off the Ivory Coast, commodity market price rigging for profit and or on consignment, you name it. Glencore is still headed by one of the co-conspirators in the U.S. indictments against Rich's company, their CEO, Ivan Glasenberg. In the 1990s, Glencore was privately owned by Marc Rich, but was split into two companies with the exodus of a few of the rich boys who started an identical operation called Trafigura. Having the two companies kept the spotlight off the Marc Rich entity, but was not hard to imagine that these two management teams worked together to foment their market manipulations and operations. In 2011, Glencore went public and Trafigura was kept private to avoid the scrutiny of the regulators and law enforcement officers. They not only liked the privacy, they needed it. For over 40 years, Marc Rich's companies traded, conspired, and rigged commodity markets with practical immunity, setting up each market rigging operation by either holding back physical inventories or flooding physical markets with product depending on where there was money to be made. Although physical commodity trading can be a great way to make money if you control the majority of the inventory, the real money to be made was in leveraged futures and options contracts, especially when you can significantly influence the supply of physical inventories. Knowing the future outcome of every futures or options bet on the commodities would be very lucrative. Fast forward to today, and it's clear that something has gone wrong at Glencore and Trafigura. Their game is no longer working, and being massively leveraged commodity derivative players is not a good thing for the rich boys. Glencore's lost 65% of its market cap in less than 3 months with a sudden 29% drop on Monday, 28, 2015. Remember, subsequently, they were bailed out by Chinese investors. It was the Chinese, the official government arm of the Chinese investment juggernaut, shall we say. Their, quote, reported bank debt is ballooning at over $300 billion. When you add in operating lines of credit and letters of credit, it's close to $100 billion, and revenues are falling off a cliff. And then it gets into the credit rating, and again, they were bailed out by China. Trafigura, on the other hand, is no better off because they are private and less is known about their problems. In January, they were estimated to have $20 billion in debt with a much weaker cash flow than Glencore. Again, rumors of collateral calls are spreading, but there's something else happening at Trafigura. The founder and largest shareholder and one of the original rich boys, Cloud Dauphin, turned up dead on September 30th, the last day of the third quarter in Bogota, Colombia. The company said he died after a battle with cancer, but he lived in Switzerland and France, not Colombia. I wonder if he really died or just disappeared to some tropical island that many rich criminals go to in their, quote, afterlife. Given the wild stock price fluctuation with Glencore and the rampant speculation about the demise of Trafigura, I would venture to say that the commodity rigging game has been so successful for all these years is now coming to an ugly end. Of course, again, China bailed them out. So it's interesting to see Trafigura in the news again, struggling with losses with Deutsche Bank and the criminals that they work with. Like all financial conspiracies, the ramifications won't hit the mainstream media until weeks or even months after the damage is done. It was true with Lehman Brothers, Enron, AIG, Madoff Investments, but in the end, we will find out the truth, and then all my friends at GATA and those travel with me on the road to Ruta can finally say, "We told you those markets were rigged." That's a Bix Weir article. I will put it right at the top. But if you're interested in commodities or you're an investor in silver or gold, an amazing read. If you want to read about the dirty underbelly of commodities, check out the life story of Marc Rich. He made a lot of enemies out there, and he rigged a lot of markets, and it's quite a story. Not many people talk about it, but check it out. The story of Marc Rich and how it is right in line with this headline right here. Deutsche Bank taking hit from metals deal. And one of the rich boys right here, Trafigura. There's Trafigura right there. That can't be good for the gold, silver and copper and zinc derivative markets. That's where they die. They die on the plains of the derivative market. And seeing commodity trader Trafigura knee deep in this one goes right back to Marc Rich, to the criminal rigging of all markets. So just a heads up, don't know what it means yet. I don't think China is going to do any bailing out. If Trafigura, and keep an eye for Glencore too. If Trafigura starts hitting the news in a bad way, I'll guarantee you Glencore is not that far back. I'm going to do a little search for Glencore right now. But those are the rich boys. And not rich as in rich. They are massively rich. Probably the richest people on planet Earth. But they come from the Marc Rich trading group. And it's all about commodities, baby. Anyway, BixWeir, roadrunner.com. Talk to you guys later.